What is a cap table and what are the 7 red flags to new investors? Hi, my name is John Stoddard. I'm the founder and CEO of Pitch Deck Secrets and $1 Million Pitch Deck. Over my career, I've raised over $22 million. What are the 7 red flags to new investors? Well, let's first talk about what is a cap table. A cap table is a capitalization table. It shows the equity ownership for a company. The cap table is essential for making financial decisions involving equity ownership, market capitalization, and market value. A cap table helps private companies maintain the calculation of their market value. Also, a cap table is a tool to understand how investment terms impact the next funding round and the next and the next. So what are the 7 red flags to new investors? Well, first, a small founders and employee option pool. That's a risk for a new investor. Investors want to make sure that founders own enough and make sure there is a healthy option pool to attract employees. The more potential upside that the team has, the more motivated they will be. And an investor also want to make sure there's enough equity left over to bring in new investors in later rounds. Second, too much founder dilution is also a risk for a new investor. The smaller percentage, the lower the motivations. A friends or family member or angel where they give you too much cash, which you need to get going to start, great. But if you offer too much generous terms, this is a risk for a new investor. Incubators or accelerators that ask for too much equity in exchange for office space or early advice, they're not deal killers, but this is a risk for a new investor. Too many investors is a risk for investors. Negotiating future ownership stakes with lots of small owners is risky for the investor. Giving away equity to outsourced partners for one-time contribution is a risk for a new investor. I mean, there's a perfect example. I think Zuckerberg gave a guy that painted his murals some options, and now it's worth over $200 million. Giving favorable or different terms to investors is a risk for a new investor. When each investor has their own unique terms, the calculations can become too complicated, which introduces risk. The conclusion on cap tables. If a cap table is not properly managed, it can create red flags that can hurt the ability to raise capital in the future. This is if you're planning on being a billion-dollar company. That means you're going to go through a number of different rounds. If you're a smaller company and say, I just need one investment, it's not that big of a deal. But go professional, because most investors will request a detailed cap table. Need help raising capital? Take a shortcut. Get my free training at $1millionpitchdeck.com or my free book at pitchdecksecrets.com. Thanks and cheers.